I happen to be a kick-ass accountant.
Hey everybody, this is Ryan and I'm here to guide you through problem 4.1 from the Accounting 240 course pack. Shall we do it? Let's do it. Okay, so here I have set up the problem. On my left, I have the template that I'm going to be filling in the response to this problem to. And on the right, of course, we can see that we've got the narrative to the problem. So I'll go through the problem with you and then I'm going to fill in the response. So we have Mrs. Susan Shiskapanska. Susan Shiskapanska. I think that works for me. Okay, so we have Susan here, and she is going to be receiving a bunch of different types of income. Okay, so we've got $1,900 in eligible dividends received from a Canadian public company. Now, remember, if we're looking at a Canadian public company, the type of dividends received is most likely going to be eligible dividends. In fact, it has to be eligible dividends because a public company can't actually issue non-eligible dividends. That's sort of information from another course, but just FYI, all right? So we have $1,200 of non-eligible dividends. It says ineligible here from a Canadian-controlled private corporation, CCPC, during the calendar year. Now, dividends that are issued from a CCPC are in all likelihood going to be ineligible dividends. It is possible for them to be eligible, but again, I think that's subject matter for another course. Assume that if you're seeing non-eligible dividends, and assume that if any dividends are being issued from a CCPC, they're going to be ineligible or non-eligible dividends, as indicated in the narrative here. So in addition to the dividends, Mrs. S had a $12,000 three-year bond purchase on November 1st of this year. The bond earns interest at 6% per annum with the interest paid at maturity. It's important to note that the bond was purchased this year, so we have to figure out if we have to accrue any interest. If so, how much? Costs incurred by Mrs. S during the year included investment advisor fees of $500 and interest charges directly related to the investment revenue of $200. These are expenses that were incurred by Mrs. S. So she had some revenue, some income that was coming in, and then she's also got some expenses. Those expenses are going to be able to offset some of that revenue to reduce the net income and thereby reduce the taxes, one would assume. Susan also owns rental property. Ooh, good job, Susan. That generated revenues of $8,000 and incurred cash expenses of $4,500. The maximum CCA is $4,000. What's required for this problem? Calculate Susan's net investment income for the year. I think we can do that. So let's do that. I'll jump over here to my template on the left. And I've sort of got things established here. You can see that I've got property income, which is what we're basically determining for the year. Now, I know it says net investment income for the year. It's not worded particularly well. We want the total property income. The investment income, I would consider and classify to be the investment income from security, and then you've got rental income. Both of these are considered property income. So what we're trying to determine here is the property income. And my apologies for the wording there in the question, but let's calculate the property income for Susan for the year. So here we have property income. We'll start with the investment income from the securities. Now we have eligible dividends. We know that we had of $1,900. So I'm going to go and plug that in. Now remember, for dividends, when dividends are received, and this is something that people often miss out on exam, dividends have to be grossed up. So the amount of money actually received by Susan is $1,900. However, the amount of income that she reports needs to be grossed up. Right? So for eligible dividends, the gross up rate is 1.38. So this means that they're going to be $2,622 worth of income that Susan's going to be taxed on. There's always a big difference between money that was received and income when it comes to dividends, right? So remember, we're in tax here. We're in tax world, in tax language. So we've got income versus the actual money. So the income is what's important. We've got $2,622 worth of income. Next up, we've got some ineligible dividends. We had $1,200 worth. Now the gross up rate is different here. It's 1.15. We can see that generates $1,380 worth of income. Let's focus now on the bond. So we have a bond, right? Susan has purchased a bond. She's given her money to some sort of bank or a company or corporation or government or whatever, and the government is paying her interest. She's lent money and now she's getting interest. The interest income needs to be recorded. However, given that the bond was purchased during the current year, The requirement for interest accrual is the latest the anniversary date. So Susan does not need to and is not going to accrue any interest for the current year, right? Susan here will have interest income of nothing. The first anniversary accrual date would be November the 1st of the subsequent year, right? So the following year, meaning nothing has to actually be recorded this year. There is no interest income for this year. Now, if that bond had been purchased in the prior year, then we would go ahead and accrue interest for this year for one full calendar year. However, it hasn't happened here. So there is $0 to actually accrue here. The total income that we have so far, if we're doing a subtotal here, is $4,002. Now, that's our income. We want to take a look at what the expenses are. So we know we have some deductions that we're going to be able to take. These expenses were incurred in order to earn this particular type of investment income. So we had some counseling, and the counseling was, if I jump over here, an investment advisory fee, is what it was called. So we'll say $500, investment advisory services. Doesn't matter. Like so. Interest expense, interest is spelled wrong as well. Interest expense on investment purchase. So there is interest charges related directly to the investment revenue. Now, how would you have an interest expense here? So what is likely is that Susan has borrowed some money in order to make the purchases of these particular investments. You can borrow money and which you can then invest to earn investment income. That money that you borrow from a bank, you potentially have to pay interest on. So we have two streams of income, of interest here, one potentially coming in and then one going out as an expense. This is the actual expense. So the total amount here is $700. The net investment income from our investments is the $4,000 minus the $700, which gives us around $3,300 for investment income. Now we're going to take a look at that rental income as well, because that's part of property income for Susan here. So rental income, we've got revenue. We know that the revenue was $8,000, I believe. We have some expenses that were incurred of $4,500. So we're going to plug in $4,500 right here. The difference between those two is $3,500. So that is our net rental income before capital cost allowance. Now we know that the maximum capital cost allowance, and we've been given this, right? So presumably there are a whole bunch of capital assets here that are being depreciated. If we were to determine the maximum amount, it's $4,000 as given here. However, remember with rental properties, you cannot deduct more CCA than you have rental income. So the maximum amount of CCA that's going to be deducted this year is $3,500. We are limited to $3,500. You cannot create a rental loss or increase a rental loss via deducting CCA. So what we have for net rental income here is actually zero. So the total property income, when we take a look in the end here, is the $3,302 that were generated from our investments. And that's all we have for this one, folks. Stay tuned for the next great video in which I'll go through some more property income stuff. Yeah, excitement, right? I know. See you then. Thanks for watching my video. Did you like it? If you did, press the like button. Did you find it helpful? Well, there are plenty more videos right up here. If you really found it helpful and you want to be updated on all the latest videos, why not hit subscribe? Right over there. All right, everyone. See you next time.